Hey guys, today we're looking at a company that is going to be probably very successful in the coming years just with the release of GTA 6 based off GTA 5. Obviously, one of the most successful video games of all time, if not the most profitable, I believe. But we're just going to be looking at their numbers, see if we should buy, sell, or hold. So let's jump into it.
Cool. So we are in Excel here, and we have started just by Googling Take-Two's 10K, pulled up these two documents just to show the years that we're looking at. So 2021, 22, 23, 24, and 25. We have segmented our Excel sheet to match the way they have set theirs up. So we're going to have revenues, which is comprised of games and advertising. Pretty simple on the cost of revenues. It's just the one line item there. And then getting into the operating expenses, pretty standard: selling and marketing, research and development, G&A, depreciation and amortization, goodwill, and then business reorganization. And so to make things a bit simpler, I have already populated this in one tab, so I'm just going to focus on Excel, and I will go ahead and get all these numbers in here from revenues, cost of revenues, operating income, net income, earnings per share, and shares outstanding. Cool, so should be able to see this a bit better, zoomed in a little bit. The only reason 21 and 22 are blank in these two is just they hadn't set up their revenues by these two subsections yet, so just filled in the total revenues, but they broke it out by game and advertising starting in 2023. So we'll just start to go through here. We can basically see right off the bat, numbers are looking pretty good from a revenue standpoint. That does continue to grow pretty steadily through 2025. And then obviously with our projections, that's looking even better. And so the revenue numbers are basically coming from looking at the previous year and then adding the expenses as a percentage of sales. So we'll get into that a bit more as we move down, but you can see those are steadily increasing. Cost of sales likewise are increasing as well, although in 2025 we did see a little bit of a decrease. So that should help the profit a bit, which we are seeing here. The profit jumps up into the 3,000s, so good sign there, and then obviously continuing to grow into our projections. Getting into the expenses, you can see the expenses actually take a bit of a drop in the last couple of years here, so that's rather interesting. Actually pretty significant from 2022 to 2023. So not quite sure what is going on to make those drop. You can obviously see just with selling and marketing, G&A, R&D, depreciation and amortization. So overall, just spending a lot more, or spending a lot less, I should say. Um, so could just be ramping up towards the release of GTA 6, really focusing on that. But pretty interesting there. What is super cool just about doing an analysis like this is you can actually see that since they are spending way less in over the last couple of years, their net income has actually been dropping a ton as well and is actually negative. So that may just be sort of a business, strategy kind of response to how things are going. So that's super interesting to see. And that'll definitely probably affect some of our projections moving forward on the next tab, but pretty interesting. Looked like the expenses were dropping and that could help things, but you can also see the net income is becoming negative and that is growing more negative as well. Pretty apparent too with the earnings per share that things are starting to become negative, and shares outstanding, I guess they are issuing more shares of stock, so that could just be a way to make more money perhaps. But super interesting here that the expenses as a percentage of those sales, expenses are far exceeding their sales. So in 2022, actually by almost 600%. So that is pretty telling that things may not be headed in the best direction, but super interesting just to dive into these numbers and see what it's actually looking like. And so last thing on this page will just be our percentage of sales, so we can populate these. So a few things that we can look into here. We can just see a lot of these expenses are pretty steadily increasing. We have CapEx, property, plant, and equipment. I guess I wouldn't say steadily increasing, kind of fluctuating up and down a little bit. Receivables, similarly, pretty high in 2021, actually negative in 22. So fluctuating kind of all over the place. Payables, that's something that does seem to be increasing steadily. So just a sign that they are owing people more and more money. And then ultimately changes in working capital, what we're looking for at the bottom. You can see this is fluctuating a little bit from positive to negative. So why don't we jump into the discounted cash flow and see how things are looking for the next 10 years. I was really struggling based on my research to figure out what to put for the discount rate and free cash flow growth rate. I know for the growth rates, they've seen some not so great numbers over the past couple of years, but with GTA 6 releasing next year, I'm thinking that can really impact things and really skyrocket them upwards. So tried to go a little bit higher than some of the projections. And for the discount rates, tried to go around the industry average as well, but was actually planning on playing around with those a little bit, which I'll do in a little bit here. So just looking at some of these numbers, we do see that revenues are steadily growing, and then ultimately at the 6% rate that we typed in. So you can see that's a good sign. Operating income similarly increasing pretty steadily. Interest expense, income before taxes, negatives that will ultimately impact the net income. I know we did touch on the fact that the net income was starting to decrease over the past couple of years, and in some of these projections, it's still decreasing, but eventually should become positive, which is a good sign. And I'm almost wondering if starting next year or the year after, when GTA 6 is out and that income is really flowing in, hopefully, things will start to turn around a bit sooner than we're seeing here. So one of the biggest things that we're noticing here is the free cash flow. It does start out negative in our first year of the projection, and for a few years after that, it's still negative, but it does ultimately turn around and become positive. So that's a good sign. Terminal value is positive as well. Could have seen it becoming negative just based on these numbers they've seen recently, although it's not really taking into account GTA 6 coming out next year. So we can basically get into these additional numbers we have to type in. So I will do the debt here, which is going to be right here. So we're going to type in, making sure the scale is correct, 91.8, and then the cash. Again, making sure the scale is correct, 561. And then we're going to take a look at the shares outstanding. So we'll say that's around 182 million. So making sure the scale is right here. We'll go with that. And then the current share price puts us at 229.10. And so that would give us a downside of 26.1% and an implied share price of $169. So that would indicate a sell decision, but I did mention I was a little skeptical about these two numbers, the terminal discount rate and the free cash flow growth rate. So I'm actually going to do a little bit of a what if analysis, kind of a sensitivity analysis, and basically just see what some different numbers might look like. So let's set up our data table. So we're going to do the implied share value right here, and we're going to do a few numbers just to see what we would get with different discount rates and different growth rates. So we're going to do the growth rate on top here and say we want to start at 5%. We'll do 5.5, 6, make sure this is the right number of decimals that we want. So we'll go out one more, drag these few, we'll go to say 7%, and then on the discount rate, we'll go 7%, 7.3, 7.6, Make sure we have another decimal. Drag this down. Let's go up until, say, 9.1%. And so then we're simply going to highlight the area, go to data, what if data table, and then for the row, we're going to want this discount rate. For the column, row, we're going to want the growth rate. And column will be the discount rate. And once we make this, we have all of the different possible scenarios. So if we are looking at what we currently have, 8.1 discount and 6.5. Guess that's not quite an option here, but if we were to do 8.1 and align that with 6.5, we should get 169.39, which is what we have here. So looks like we've done this correctly. And so you can basically see all of the different scenarios. If you're to increase that growth rate and decrease the discount rate, you're going to start getting larger numbers up here, and just doesn't really make sense to have the same rate, which is why we're getting a 0 here, but smaller growth rates and larger discount rates will give us a larger number. So you can basically just see all of the different scenarios. Anything above this 229 price is where we're going to start seeing some upside. So looks like from here, here, and here. So these numbers are going to be the ones where we're seeing a growth rate high enough and a discount rate low enough. So yeah, pretty interesting just where things fall, but it does look like our ultimate decision based on the numbers and the rates we've chosen is going to be to not buy, actually sell at the moment. But obviously you can plug in some different numbers and just see where things land. But might be the only time I've done a forecast and a discounted cash flow, and I actually disagree with this decision. But again, this is all just based on the quantitative factors, and I think with GTA 6 being released next year, we're going to see just a big explosion from this company in terms of revenue, profits, everything. So in that case, I would probably decide to sell, but let me know what you think.
How fascinating. Thought that was a good one. I think time will really tell on this one getting into next year once the game releases. See how sales are actually going. I do think it will very positively impact things, but let me know what you think. See you soon.